Welcome to Hands Off Investing. We are a female-owned, privately held real estate debt firm that powers the lending operations of Coastal Capital Lending. In this webinar, we'll show you how our fund provides monthly income to investors without the stress of managing properties. It's real estate investing made truly passive. Abby is a CPA and has a master's degree in accounting. She leads financial oversight and underwriting, as well as investor and client outreach. Kelly is a licensed attorney and former operations manager at a hard money firm. She handles loan servicing, legal, and compliance. Lisa is our chief investment strategist. She is a commercial and multifamily expert with 30-plus years of experience and a track record of growing investor portfolios. Together, we manage the fund with precision, care, and a commitment to performance. Hands Off Investing is a real estate debt fund. We pool capital from investors to fund short-term loans to experienced fix and flip borrowers. Our lending arm, Coastal Capital Lending, handles origination, servicing, and borrower vetting. As an investor, you earn monthly interest while we do all the heavy lifting. Here's how the real estate debt fund cycle works going clockwise. First, you invest your capital into the fund. Next, we deploy funds to qualified borrowers. Then borrowers make monthly payments to the fund. Finally, you receive monthly returns. You get consistent income secured by real estate with zero involvement in property management. Once capital is ready, it's deployed through Coastal Capital Lending to experienced, vetted borrowers. These borrowers use the funds to purchase and renovate properties, then repay the loan with interest over a 6 to 9 month period. Investors start earning monthly returns as soon as their capital is placed. At Coastal Capital Lending, we structure every loan with safeguards designed to protect our investors. We hold the first lien position on all mortgages, giving us top priority in repayment. Every loan goes through a rigorous qualification process, including independent third-party reports verifying both the current value and projected future value of the property before closing. We cap our lending at 70% of the after-repair value, ensuring a conservative margin of safety. We'll lend up to 90% of the purchase price and 100% of rehab costs, which still requires the borrower to contribute at least 10% down. Each loan is backed by a promissory note and mortgage, plus personal guarantees from all borrowing entity members. Coastal Capital Lending is listed as additional insured on every borrower's insurance policy. We only work with experienced borrowers who have successfully completed at least 3 deals in the last 18 to 24 months. Rehab funds are released on a reimbursement basis, ensuring borrowers put their own capital to work before drawing from us. And finally, we use automatic monthly ACH payments to eliminate the risk of late or missed payments. Together, these measures create a conservative, disciplined lending environment, keeping investor capital secured while generating consistent returns. If a borrower defaults, we're ready. Coastal Capital Lending holds a first position mortgage, allowing us to foreclose quickly. Personal guarantees also let us pursue repayment beyond the property. To date, we've maintained a 0% default rate. With conservative underwriting and deep local experience, we can recover capital efficiently. If any losses occur, they are absorbed by the fund, not individual investors. Our investor returns are structured on a tiered basis, depending on both your capital contribution and your commitment period, and are shown here. The minimum to participate is $25,000, and the fund is open exclusively to accredited investors. Each investor can choose between monthly payouts or monthly compounding with a 3 to 4 year term. Next, let's take a look at what the difference between those two options looks like in practice. Say you invest $100,000 at 9% interest and choose monthly payouts. Here's what that looks like over a 4-year period. Each month you'll receive $750. That adds up to $9,000 a year. Over the full 4 years, you'll have earned $36,000 in interest income. This approach is ideal for investors seeking passive income each month. It's best suited for those who prioritize cash flow and security over long-term growth. Now let's look at the same $100,000 invested at 9%, but this time with monthly compounding. Instead of taking the payouts, you reinvest the interest each month. Over 4 years, you'll earn $43,141. That's roughly $7,000 more than the simple interest option, just by letting your earnings reinvest. Compounding monthly interest is perfect for investors who want their money to grow over time by reinvesting earnings instead of taking cash out. It's best suited for those focused on building long-term wealth rather than immediate income. Once your capital commitment period ends, you have two options. You can either withdraw your original investment or leave it in the fund to continue receiving monthly returns. For monthly payout investors, a 1-year commitment is required for returns that earn up to 9% annually. A 2-year commitment period is required for returns that earn 10% plus annually. For monthly compounding, you choose between 3-year or 4-year commitment periods. Regardless of which option you choose, you'll receive a Form 1099 annually to report your interest income. Since October of 2023, we've raised $3.1 million for the fund. With that capital, we've originated $5.4 million in loans and completed 26 loans to date. On average, each investment has been about $155,000 from investors, and we as the ownership team have 15% of our own capital in the fund. To this point, 20 fund investors have participated, we've maintained a 0% default rate, and we've already paid out more than $268,000 in interest. Our next milestone is to scale up to 10 loans per month by the first quarter of 2026. Here's what our investors are saying. Their feedback highlights the consistency, the simplicity, and the sense of security they feel with our approach. We're proud of the trust our investors place in us, and we work hard every day to continue earning it. Let's take a closer look at one of the fund's early success stories. This was a single-story, 3-bedroom, 1-bathroom home, just under 1,000 square feet of living space in North Charleston, South Carolina. Thanks to a thorough renovation and a strong local market, the property sold quickly. The borrowers purchased the property for $190,000 and put $39,500 of their own money toward a full rehab. Within the 6-month loan period, they increased the home's value to $293,000. For Coastal Capital Lending, this deal delivered a 24% return on investment, generating over $20,000 in interest income and fees. With a conservative 59% loan-to-value ratio, our investors' capital was well protected, making this loan not only highly profitable but also secure. It was a win all around, with both the borrowers and our investors pleased by the successful outcome. Thank you so much for joining us today. We hope this gave you a clear picture of how hands-off investing offers a secure, profitable path to passive income. If you're ready to start earning or want to learn more, reach out anytime. We'd love to welcome you into the fund where profits meet peace of mind.